primarily on the profit and loss report, which is F3, and the balance sheet, which is F4. Now, 2016, it was an unusual year financially. We had a deficit spending in our operations as we planned, while at the same time we built up a large cash reserve by selling 2 parsonages and the Ann Arbor Church building, again, as we planned. Our cash on hand and overall financial condition is stronger now than any time in at least the last decade. So, there you go. Now that at first can sound confusing because you say, wait a minute, we had a deficit spending last year, but yet we're stronger than we've been, okay? And I get that, especially when I start throwing some numbers around, it gets a little there. But so to help me, I'm gonna need some props. Oh, wait a minute, this is from last year. We'll take care of this, please. I have 2 buckets. This is not an ad placement, so I'll do it this way. 2 buckets, okay? As you can see, I have a white bucket and a blue bucket. No, that's just my bucket list. They're no different other than they're different colors, and the reason they're different colors is just so you see there are 2 different buckets, okay? I'm going to call the white bucket, we're going to call this our normal, can we put it right there? Normal operating bucket. The income that goes into this bucket is from the ministry share or the apportionment payments that each of our churches pay on a monthly basis, month in and month out. This is the bucket that we use to pay our regular activities for the conference operations. So the normal invoice money goes in this bucket and then comes out, our operations. You came too soon. Typical expenses that come out of the white bucket are things like conference salaries, insurance, travel expense, rent, professional fees, the phone bill, things like that. The single largest line item in our operating budget is what's called home ministries. It's also called Equal Participation Plan, or EPP. This is the ministry share that conferences pay the denomination. More than 46 cents of every dollar that we invoice for ministry share goes to the denomination. That leaves 54 cents of every dollar that we invoice for ministry share for our other operating expenses. Now, if you're from a church that pays about $750 a month in ministry share, which we have a number of you churches are in that category, you need to know that that $750, the first $350 we send to the denomination, and then we have the remaining $400 a month for our other operating expenses. I'm going to talk more about that when we get to the 2018 proposed budget. Also know that if we invoice $750 and it doesn't get paid, we still send $350 to the denomination, so know that. As you know, the emphasis of Superintendent Rhodes' first term has been to provide support and leadership training to our pastors and lay leaders to help build a turnaround culture so that our churches can replicate and multiply. This requires cash. That's where our blue bucket comes in. We're going to call this bucket the non-operations income bucket. The income from this bucket is sources which are not from our churches paying their invoices. This could be from financial gifts. See, you came too early. Or probably more importantly, through the sale of assets such as buildings. Again, on purpose. Now, we can't depend on this money because once it's gone, it's gone. This is not reoccurring income. Once it's spent, it's gone. Now let's look at some of the numbers here. Our operating income statement or profit and loss report is on F3. Normally, you cannot get a whole slide with the numbers, so I'm going to be just kind of putting some my numbers in there as a summary. Think of this as like a motion picture, okay? The income statement shows cash that comes in, cash that goes out, and where it goes. Last year, income received was $996,000. The ministry share collection rate was 99.2%. 99.2% of everything that we invoiced was paid last year. Now, I looked back about a dozen years. I just went back about a dozen years, and there's no year better than 2016. And so for that, I want to thank you because that is incredible. The average over the last 10 years was about 97.8%. Again, incredible. That's an incredible number. We had some additional income of $17,000, which was primarily from debt repayment from loans and gift income. Our operating expenses were $1,162,000, which were higher than income, again, on purpose. They give us an operating deficit of $148,000. So how can we spend $148,000 more than we bring in? Is it maybe a special assessment to all churches? No, because we have a blue bucket. We use cash from our blue bucket to cover these investments in our future. Again, on purpose. Think of it this way. We invested some of our savings in our future. Last year we had 3 events where those attending were charged to help cover the cost of the event. They were the Pastor's Spouse Retreat in Frankenmuth, annual conference, and the Ignite conference. If you remember, those 2 were right together. Now, some have in the past wondered about the income and expense details, so here they are. The Frankenmuth, we charged $25,174. Total cost was $30,613. Annual conference last year, we have 2 ways that we generate income for our annual conference. One is through the charge to the members who attend, and then we have sponsorship dollars to sponsor the lunch, for example, or the dinner this evening. And then you'll see the total cost. So last year there was a surplus of about $1,700 for annual conference. And the third event was the Ignite conference. You can see the income and the expenses for the Ignite last year. One of the things that is really hard to figure out is we need to commit what the price will be for the event before we know what all of the costs will be, because we've got to get that ahead of time. So that's just information that people have asked for, so there you go. Let's look at our balance sheet, which is on F4 of the report book. The balance sheet shows the financial health of the conference. Think of the balance sheet not as a movie, but more as a snapshot of our financial condition at a particular point in time, December 31, 2016. It shows what the conference owns and what the conference owes. We have cash in the bank of approximately $800,000. Some of it's in the bank, some of it's invested at the Free Methodist Foundation at a slightly higher interest rate. We have accounts receivable of about $79,000. That's from 2 loans, one to the Somerset Beach camp and one to another church. That number is down by about $12,000 from last year because they keep paying down the amount on a regular basis. During 2016, we invested $37,500 in gravitational leadership in order to secure Michael and to have access to all the GL materials. This investment gives us an ownership interest in that company as well. We had about $900,000 in fixed assets, buildings, property. There were 3 at the end of December 31st, 2016. One was the 1208 Greenwood building. There was a parsonage in Troy, which we sold in March of this year, and then our share of the Pardee Road property in Taylor. So total assets, about $1,820,000. That's an increase or an improvement over the year before of about $440,000. Now let's talk about the liabilities. That's what we owe. Primarily 2 categories. We have current liabilities, and those are really the 4 expenses that are just a little bit, this is more accounting talk, but basically they include booked expenses from previous years where we made an expense to that line item so it becomes a liability. Those would be a building maintenance fund for conference properties, retiree benefit program, a general conference expense, and a medical relief fund. In each of those cases, this shows as a liability because we have established line item expenses so that if we need to draw from them in the future, it will not impact the results of the current operating year. Most of our liability is in the loan balance. You can see the long term, the $432,000, just for the Pardee loan property. Total liabilities, therefore, is about just under $500,000. Now, just as a side note, the loan balance on the Pardee property today, whereas actually at the end of May, is now down to $428,000, a reduction of another $4,000 as of the end of May. Now, when you subtract what you owe from what you own, that's called equity. I consulted with an outside CPA firm on this one because I wanted to be able to show the gains in our balance sheet from selling assets while at the same time showing that we had an operating loss in 2016. And I said, how do we do that so it doesn't look weird, you know? And so what they did was they came up with a solution for us. And so we created a new equity line, and you can see it. See the church multiplication? That's $655,000. Rather than put the sale assets to equity, we put it to that line item so that you can see these are dollars that are available for things such as church multiplication. If we just go down through the list there, you'll see the net worth of about $855. That conference, that number represents dollars paid down against the loan on the Pardee property. The church planning loan is actually, it's an asset to us. It's the church planting, the old fund, has borrowed money from the conference years ago and is keep being paid back. And that's now the remaining balance, just under $7,000. You see the church multiplication and then the consolidated net loss there. So we have total equity of about $1,323,000 and change. Because our liabilities went down and our assets went up, we have a total gain in equity in 2016 of about $461,000. So before we go to the 2018 proposed budget, are there any questions on what I just talked about? No? Okay. I can skip this slide then. There we go. You know, the very first time I ever had to do a PowerPoint, and this is a long time ago, my daughter was in second grade. And this was back when, you know, business people did PowerPoints and they had no idea how to create them. And I came home and I just mentioned at dinner, yeah, I need to do a PowerPoint. And my second grader said, I can do it for you. So, the proposed 2018 operating budget calls for income of $750,000 and expenses of about $955,000, which represents a reduction in spending from the previous year budget, or the 2017 budget, of about $40,000. This is a deficit budget, you can see that. The conference leadership has deliberately decided to not pass on those expenses to our churches in 2018. Think blue bucket. The Conference Finance Committee and the Conference Leadership Board understand that funding our budget as a deficit from the blue bucket is a short-term solution and have elected to not raise the ministry share rate in 2018. Now, I'm gonna speak in, I don't know if you can do this, but it sounds right. I'm gonna speak in parentheses for a moment. This slide shows what the ministry share rate is for every conference in our denomination. When comparing the ministry share rate that we operate under compared to the rate other conferences use throughout the denomination, what you will easily see is Southern Michigan at 6.9 is the lowest. The other conference ministry share rates are higher and sometimes significantly higher, while often providing less benefit. I wasn't sure how well you could see this because oftentimes you can't put a lot of data on there. So this is the slide with just the numbers. Again, we are 6.9. Let me go back to the church who might be invoiced $750 per month for ministry share for a moment. If your church was located in East Michigan Conference, not very far from here, your ministry share would be $900. And if you were in the Mid-America Conference, which is Oklahoma and Arkansas, your church would enjoy a ministry share of $1,435 a month, an increase over the $750 by another $685. Now, I point this out to draw attention to the fact that our leadership is committed to being good stewards and trying to maximize the value that we provide. In the future, don't be surprised if an increase is necessary to get us to a balanced operating budget while still achieving our missional imperatives. That's the white bucket. To be clear, in the future, we should expect increases. End parentheses. Let's go back to the budget, okay? Here is the expense portion of the operating budget. Now, F5 has a lot more data, but you can't read it if I put the whole thing on. So this is the top part, the administrative portion of that. Again, it represents $955,000 total compared to spending of $995 for 2017, which you approved a year ago. Does not include the loan repayment, that's below the line, or the fringe benefit side of the invoice. This is just the operational portion, okay? I'm gonna go over the expense line items where there is a change from the previous year. Salaries and housing allowance, there's an increase by $15,600, and that is what basically how that number came about is there are no raises for any conference personnel. And then there's a hiring of a part-time executive administrative assistant to support superintendent and the assistant superintendent. Health insurance, this is a really weird one because what it shows is that our costs went down. In reality, our costs went up for health insurance, but we overestimated last year, so it looks like it went down. Got that? Okay. Other personnel costs include the pension, which would be with an increased rate, and the FICA taxes, as well as the overtime. We have an overtime fund that we use that where you can basically bring in help for Betty when we're doing Ignite conferences or even annual conference. Facilities, you can see I skipped those two because they're the same as they were previously. With the hiring of our assistant superintendent, our landlord increased the rental rate to include office space. And then other, we have been using a lot more legal expense trying to review documents and so on, so we're adding to another $2,000 to that line item for that purpose. You can see the top several there are the same. When we get down to strategic plan implementation, 8,000, that's a decrease. We didn't decrease it, we moved it to a different line. I'll get to that when we get to that line item. Pastoral relocation. We're increasing that by $2,000, and that's the cost to interview prospective pastors and to help newly appointed lead pastors locate into our conference. Pastoral church support. You see the reduction there. We moved $75,000 of gravitational leadership investment below the operating line because it's not an ongoing expense. It's in the total, but it's not there. We reduced line item expense by another $25,000. That's how we got to that number. Taylor maintenance utilities. Last year we put in a line item because there was a vacancy on the, let's call it the high school side of the building. We've been able to eliminate that expense of $40,000. As the CLB report indicated, we have a rental agreement, 5-year rental agreement with Head Start of Wayne County. Is there any government worker in here? If you are, do this. They began paying us rent in December. Their program's not up yet because they still are trying to figure out what they're doing, okay? Those funds that have come in are in a separate bank account, and they started coming in January, and that is why we don't have a need for the $40,000 because those funds will take care of that, okay? Home ministry. Oh, next slide, excuse me. See the balance there, that's a increase of the 138 from the previous page, that's all that is. And then what you'll see is the home ministry, that should say decrease, by the way, not increase. Home ministry, it'll be up about $7,300, and that's what we again pay to the denomination on an annual basis based on all the reports that churches submit online. Okay, page F8, this shows our ministry share formula. This formula is the same that it's been for years with the reinstatement of the pass-through or the in and out funds. You recall a year ago the denomination Board of Administration removed that as part of the calculation. That's now been added back in, okay? And as I mentioned, the ministry share rate remains at 6.9%. Slide F6, again, you can't get the whole slide on one screen, so what I've done is I've just shown you the top several names and then the total of what your page will show. And essentially, this is the ministry share rate when you take the formula and apply it to what you reported as your total income by church. This is slide F7. This shows the results by church using that same formula for the loan repayment share for those churches who have not yet paid off their principal portion. This also represents no change from the previous year. So we have 3 recommendations, so before we get to the recommendations, are there any questions on the budget? Okay. Mr. Chairman, how do you want me to do this? You want me to show them? These are
Yeah,
the three
let's take them
recommendations.
let's take them one at a time.
Yes. The first, these incidentally are the same recommendations that we've done the last probably 10 years or so. The first is that the proposed budget for 2018 be approved and that the conference leadership board make any necessary adjustments prior to the start of the budget year, which would be January. And that's the report that you have on page F5.
All right, so this is the budget that you've just reviewed. And it comes from your leadership team, your leadership board. So it is before us. Are there questions or is there discussion? I don't see any, so that, yeah. Yeah, repeat the question.
The question is, the $8,000 that was removed out of, and I don't know how to go back on these slides here, but that was removed, it was put under church support and planting as part of a $20,000 cost. Does that answer your question? Okay. Remember, the number was $20,000, it's in that number.
All right. Any other questions or discussion? All right, we're going to vote then. If you will approve the proposed budget for 2018 as has just been presented, raise your hand. All right, thank you. And if you are opposed, you may indicate by the same sign. And it is approved.
Second recommendation is that the ministry share described on pages F6 and 8 be approved.
All right, is there discussion? Seeing none, if you will approve the ministry share as described on these pages, raise your hand. Okay, thank you. And opposed, same sign. All right, you've approved your ministry share plan.
And then the third recommendation is that the loan repayment share as described on page F7 be approved.
All right. Any discussion or questions? All right, all in favor of approving the loan repayment share as presented, raise your hand. Thank you. And opposed, same sign. All right, that is approved as well.
Mr. Chairman, this completes the stewardship and finance report.
All right, thank you for a good report and for the buckets and all the help and understanding. Well, I think we've come just a bit early to our, as I was saying, just a little bit late to our retreat. Well, when you're having such a good time, you lose track of time. So we will, let's come back in 15 minutes. Yes. First, however, an announcement, or several, actually.
Okay, so we are about 12 minutes late. First time today we've been running late. We'll observe a 20-minute break, and we will reconvene here at 3:30. That'll give us 18 minutes, so a little bit briefer. Before you leave, I do have an announcement about last night's response to the State of the Work report that I wish to share with you. First of all, I want to express my appreciation for the many people who responded, who really felt clearly the Lord speaking to them last night. 72 cards were received at the end of the service last night. 70 people committed to being on the prayer team, and as long as we have names and email addresses, we'll be in communication directly with you about that. 29 people checked the box that they would be committed to mobilizing church resources in order to partner together as a conference in this project. That's 29 out of 36 churches. Several of our lead pastors were not here due to a variety of reasons. That's an excellent response rate. 28 people made financial commitments of almost $37,000 over the next 36 months, and 28 additional people indicated they will take time to pray and consider what Jesus is asking them to do. Isn't that wonderful? Praise the Lord. Yeah. So let's pray that we continue just to listen to Jesus and take courage to do what he wants us to do. God bless you. We'll see you during the break.